bottom or near it. If you've been watching the Bitcoin and crypto markets in recent days, you'll know that prices have been going to the downside for Bitcoin and most alts. Not everyone, but most of them. Certainly the big ones that a lot of people, or that most people, seem to trade or buy to invest. Well, why is that? And is there any hope that prices will go back up again? Well, you're in luck because I talk about the things that actually move the markets, right? Just as we do on our channel, Alpha Trading, uh, in our Discord, on our channel on the other video platforms, like the one where people like to have a good rumble and so on. But yeah, prices follow the returns, if anything at all, right? Prices don't dictate the returns dictate the price. And what creates those returns? It's the volatility, it's the standard deviation of returns that creates the returns. And you might think to yourself, well, how is that possible? Wouldn't you need the returns in order to create the standard deviation of said returns? No. It is the mathematical standard deviation of returns, also known as the volatility, also known as the variance, also known as the spread of data around the mean, also known as the delta between the ask and the bid price. It is the volatility, right? The standard deviation of returns, or if you want to call it correctly, the standard deviation of log returns on investment that creates the actual returns. Why is that? Well, because there's a delta, there is a spread between the ask and the bid. There's a spread between the data around the mean of returns. That spread around the mean of returns, depending on whether it's tight or wide, etc., is what creates the actual returns. And then those returns pretty much determine the price action. How does that happen? Well, there's this thing called correlation. When you correlate historical volatility with the data set, you get the direction that is very likely going to happen. When you correlate the returns with the data set, you get the direction of price. That's why, meaning you get the probability of the direction of price, right? The probable direction of price is going to be what the returns and their correlation to the data set show you. How can you do this? Well, fortunately, there's this little community called Alpha Trading, which I had the glorious pleasure of co-founding years ago with 5 other brilliant people. And we have built the best tools, the best calculators available to retail traders, period. They are available on TradingView, the world's biggest site for market asset charts and charting. If you want to look at market assets and you are a trader, you're a retail trader, or you may even be a professional trader, you probably have heard of and or use TradingView. I know there's like at least one other fairly popular site similar to TradingView, but it's not TradingView. And it does, not have quite the popularity of it. Think of it what you will. But we put our tools to work on TradingView all those years ago, because it is the biggest site for retail traders. So that way we knew that pretty much anyone who wants to trade or is trading in this space would easily be able to access these tools and have at it. Now, the thing is, if you look at what the volatility, entropy, probabilities, and statistics of the day are for TradingView, you will notice that the volatility of Bitcoin and altcoins is such that we may indeed not have yet reached a bottom. We may have indeed reached a point where we need to readjust and reassess just how much pain the clowns are going to take. And if that sounds cold-hearted, well, it's called tough love. And who am I referring to? Well, have you heard of the financial analyst Tom Lee? Yeah, he's well known in the media space of crypto. A frequent guest on things like CNBC, etc. Last month, he made this grand prognostication that by the end of January 2026, Bitcoin would be at $180,000. I know, quite a remarkable thing to say somewhere around mid-January, even late January, right? But he did. He said, yeah, there's a very high probability, it looks like Bitcoin's going to be at $180,000, that it could reach $180,000 by the end of January. And he doubled down on it. So, was he misleading his audience? The people that follow him actively, people that hang on his words to decide whether or not to buy or sell? You tell me. Was he misrepresenting what he knew was a very highly improbable thing to happen in order to sell more stuff to customers who wanted to buy Bitcoin before the price shoots to the moon, only to see it tank? Does Fundstrat do that? Does a hedge fund mislead people? You tell me. Do hedge funds ever go belly up? All the time. And people like Tom Lee have a limited shelf life, even though he's managed to stick around for a very long time. His shelf life is limited because you can only be wrong so many times before you become a publicly ridiculed laughingstock. Not just once or twice or 10 times, but so many times that anything you say, nobody takes seriously. And in fact, you could start having a counter Tom Lee metric. Meaning if he says buy, you sell. If he says sell, you buy. Right? Like there is with that guy Kramer. Right? There's the counter Kramer indicator, whatever it's called, I forget. But anytime that guy Kramer from CNBC says buy, when people sell, they make money. Anytime he says sell, people buy, they make money. And it's like effective, or has been historically effective, well over 90% of the time. And that's because he represents certain corporate interests that own the network he operates on. And they give him very clear marching orders, obviously. And he has said very, very often, in the past, that he basically does these things. He manipulates the audience. And he's shameless about it. He doesn't, it's his job. And if you're ignorant enough to do exactly what you're being told by a corporate shill, you're ignorant in a market full of sharks. And that is not the way to win. You need to understand the markets move because of actual maths, not because of narratives and psychology. Those are all just things to fill the airtime and fill the minds of the people putting money on the line. Hello there. What does it say? Rudest talking animal? I don't know what you're talking about. But thank you for liking and subscribing my channel, rather. Liking my video and subscribing to the channel. Appreciate it. The markets moves on relevant maths. Wow, where's my talking going today? The markets move on relevant maths. If you look at HFT firms, if you look at big quant shops, what do they talk about? What do they do? What do they deal with? They literally don't talk publicly about their trading strategies. And when they do talk about it to other economists or traders in conferences, or even sometimes on the news, they give really very veiled words because they don't intend for the public to actually understand what they're saying. Even when they tell you to their face what happened. For example, Vlad, the CEO of one of those, what is it, Raging Bull, or one of these trading companies, retail trading company, like a retail exchange. Back in around the year 2020, there was this whole thing with Wall Street Bets, a subreddit on Reddit that was basically doing short squeezes against certain companies like the GameStop company and AMC, etc. And in one of these particular splendiferous short squeezes, at a time of much volatility, when the whole world was coming to a stop because of this bug that was floating around, there was a day when, actually more than one day, but it happened on one particular day that the main drama happened. The market basically shut on that website. Webull, I think it's Webull. I don't know. I forget the name of his exchange. But he runs an exchange, a popular one. Robinhood, that's the one. Robinhood. Vlad. And he spoke with the financial analysts about what had caused his exchange to stop allowing trades on those particular stocks. And he said very clearly it was a 6 standard deviation move. Sorry, he said a 6 sigma move. And so they had to stop it because they have these automatic triggers that stop it when you have something like that. Now, for anybody watching that, they heard him say, well, there was a 6 sigma move, so we have these natural automatic triggers that shut down trading for, in order to keep things from getting too wild or whatever the words were used, to keep it stable. And the financial reporter, clearly who doesn't know anything about trading, even though he reports about finance day in and day out, that doesn't make you a trading expert, just nodded his head and was like, yeah, and just was like accepting the fact that an exchange had shut down trading activity for retail traders to protect them, supposedly. Right? When all it really did was it got them all wrecked because they couldn't exit their positions in profit. And when the market came back, things reversed on them before they could get out of their positions. And he never explained what a 6 sigma move was, which is a 6 standard deviation move. And the reporter never asked. They just happily accepted that these are the words of the CEO of Robinhood, and therefore he must know what he's talking about. So we're just going to take him at his word and nod our heads and say, oh, sure, that makes sense. But it doesn't. These are probabilities. And he shut down trading because he understood the probabilities Right? His firm shut down the trading because they understood the probabilities of what was likely to happen when you have a 6 standard deviation rule, which is why they didn't want retail traders to be able to take their profits and did everything that they could to muster as much liquid capital as they could to prevent themselves from getting wrecked. And then there was that whole affair with, you know, one of the big trading firms that lost all their capital as a result of this episode. They eventually went belly up, even though they got like hundreds of millions of dollars in loans or whatever from other companies. It wasn't enough to cover their problems, and they were insolvent. Meanwhile, Robinhood still exists, and they continue to milk the market. You know, take the money from the retail traders who keep putting money on the line, betting for or against whatever assets they do. This is not a surprise to anyone who knows about trading capital markets. We see it all the time. We see people trading assets without any clue about the maths that actually run the markets, which are the probabilities and statistics of volatility and entropy. And that's why at Alpha Trading, we boil it down to a nice little acronym for you, right? Volatility, entropy, probabilities, and statistics happens to give you the nice little acronym VEPS, VEPS. And that's what we have. A situation in which the VEPS effectively run the markets. And that is what we trade. We don't trade nonsense chart patterns. We don't trade random SMAs and EMAs, which are simply averages of where price action has been. It doesn't matter where price action is because price action is moot, as I've explained to you earlier in this video. We trade volatility and entropy and probabilities and statistics because those are the maths that actually give you an indication of where things are going. Now, how do we know that those are the maths that matter? Well, don't take my word for it. Just look at our charts. Look at our indicators. Look at our live streams. Right? We told you in mid-January when that Tom Lee guy made that ridiculous prognostication about Bitcoin hitting 180K, we told you that is ridiculous. Bitcoin is not likely to do that. And if you think it is, you've got another thing coming. But people still went about their business betting on Tom Lee because he's on CNBC, so he must know what he's talking about. He's a guest there. He's a financial analyst for a fund, a hedge fund with a fancy name. How'd that work out for them? Worked out well for Tom, I can bet you that. Because they obviously helped customers acquire a bunch of Bitcoin during that period of time. People who were jumping on his FOMO until they didn't in the last several days of January when things started to really fall apart and had already been going down from around the 18th of January. Even before that. So not 3 days after he made that silly prognostication, price was following the returns back to the downside. And yet there he was, telling everyone and their mother, oh yeah, Bitcoin's going to go up to 180K by the end of this month. And it spent the rest of the month going down. And it spent the beginning of this month going down. Now you can say, well, it all sounds like doom and gloom. Is there any hope that Bitcoin will go back up again? And the answer is, of course, it's not just hope, it's mathematics. Whenever Bitcoin or any asset goes very far in one direction, guess what? It goes in the opposite direction afterwards. What do we call this? We call this distribution and mean reversion. Distribution is when the returns move away from the mean of returns, and the price action will follow. So distribution is when the returns go away from the returns, from the mean of returns, yeah, the average of the returns if you want. And mean reversion is when the returns revert back to the mean of returns, and price action typically follows. So, have we seen enough distribution for the price action to begin following the returns back towards the mean of the returns on the upside? Well, it depends on your time frame. Within every day, on different time frames, there are distributions and mean returns and mean reversions. It literally happens every day. So can it happen that we will have price action go to the upside soon? Again, it happens every day. Price goes up and down every day. It's all a matter of your time frames and your perspective, and your time horizon, and how you trade. And that's why we trade low time frames at Alpha Trading. That's what we encourage people to do. Everyone's free to do what they want. But those of us who founded Alpha Trading, we encourage people to trade low time frames because there you have more occurrences of opportunity. Anyway, folks, that's going to do it for now. I'll see you in the next one. And remember to check out the Alpha Trading site at alphatradinghq.com/Discord. Join. I'll see you guys in the live stream. It starts at 9 a.m. Eastern Time. Bye.